Don't you wish Apple and Netflix both went on sale like 10, 20% off? They are. Welcome to the newsroom. In the news, Apple is having some issues. They got some problems. And Netflix, we all know what happened with Netflix. Earnings came out and they sold off. Both Apple and Netflix have reached all-time highs and have had probably their biggest pullbacks, especially Apple, since the Rona. Let's find out if we could get into these companies, why they're selling off, and where a good entry would be, and what's a good price target. Let's take a look at them. Oh, there goes the sun, changing my lighting. Continuity is very important. People don't like when there's no continuity. And right now, you're messing up my continuity. Anyway, we'll go dark. In the news, Apple having some issues, first of all. Drama kicked off this morning when Goldman Sachs issued an investor note arguing that the Apple stock should be avoided as the company's share price is unsustainable. Wait a minute. My Apple card on the back, it says Goldman Sachs. Goldman Sachs is saying that Apple is overvalued, but yet they have an Apple card. They're in partnership with the Apple card. It says Goldman Sachs on the back of my credit card. What are you doing? You're attacking the company you're in business with. Okay. Clearly, there's something going on here. I might have to do a deep dive on these guys. Now, Mr. Goldman, are you in a short position or are you just waiting for a long position? Because when you drop this news, and I'm not in Apple, I like it. But if I'm in Apple and you drop the news, I don't like you. So Goldman, right now, I like you. Because guess what? I just bought Apple. And I'm in Apple probably till it hits 400 again. That would be a nice swing. It's currently at 370. It did go to 360, but during the making of this video, it bumped up $10. Also, Apple could find itself the target of a multi-state probe for allegedly deceiving consumers. Details of the probe remain incredibly murky, but evidence suggests that the litigation may be imminent. Apple, someone's coming for you. This could just be fluff news just to bring the price down. This is what these guys do. So like I said, biggest sell-off looking at the chart since the Rona. It hasn't had a move like this. This is a 12% move so far. And like I said, during the duration of this video, it's back at 370. But it hit 360. It could go lower. We're going to look at some technicals now. But this is a massive sell-off. And it could be fluff. So I wanted to take a look at the earnings because they do have earnings coming up July 30th. So I wanted to see what months these earnings cover to see if they're going to be affected by sales during the Rona. So Q2, the last earning period before Q3, which is coming up July 30th, I highlighted in this green box. As you can see, it's when Rona started becoming very popular and seeing that it's actually very bad. So it's kind of like half of Q2 was affected and half of Q3 was affected. So neither one kind of had a full impact, which is good. If one of them had a full impact, then it would be really bad for Q3. But if you look here at the two green boxes side by side, I know that businesses started reopening. There were some Apple store closures, but openings as well. People going back to work, and in Q2, people leaving work. So there's a mix from what I'm thinking. I don't think earnings are going to be as bad as you would originally think, because if Q3 was like March, April, May, that would be horrible. But it's more so April, May, June. So the next thing I looked at was their earnings history. So if we look here, we have consensus estimate. This is what analysts say they think the earnings are going to be. They make predictions, consensus estimate. So they're saying for July 30th, when they drop earnings, 1.96. If you look at the previous history, the estimates were way higher. 226, 454, 284, 210, etc. All in twos and above. This is the first one in the dollar range. And if you look at the reported EPS, what it actually was, it was all over 2. Never went below 2. So because they dropped these estimates so low, if Apple pulls a 197, they beat it. It's probably going to pull like maybe a low 2, a 205. But I feel like because they dropped these estimates so low, they're helping Apple in a way. Just like if you go into a restaurant and you go in there with the pre-notion that you're going to have the best burger in the world, and then you get a burger that's incredible, but you've been building it up, now the burger's not a 10, it's an 8. But if you ate Burger King for the entire week before and you had this burger, it's a 10. This is what they're doing. They're dropping the score low, so when Apple comes out with a mediocre score, it beats a low score. If they would have said consensus is a 2.5, Apple's doomed. Apple can also move the Dow. It can move the markets. So if Apple comes out with bad earnings, Apple pulls down, many other stocks can fall with it, and markets can fall with it. They don't want that. So let's look at the technicals on Apple, see where a good entry is. It broke support at 383, it broke support at 371, and then it found support at 356. It just dipped its feet in and then jumped out. It just got its toes wet and then left. Now it's heading back up. Like I said, it's at 370. Now, if it falls back below into the 360s, breaks that current support, which is a strong support, at 356. If it falls below, next support, 343. That's a big drop. I don't think that's going to happen. I think this was fluff to pull the stock down to get in. Because maybe they're sensing a market rally coming, a vaccine coming, something that's going to catapult all these stocks, which is what I've been talking about. I'm pitching that I think another rally's coming. I smell it. $400 test again. I don't know if it's going to clear it, but I feel like that's going to come. Now, if it goes to 400, that's 8.5%. You might be looking at it like, oh, 3% move, 5% moves, 8% moves. Not a lot in comparison to these other crazy whippersnappers that are moving all over the board 30, 60, 100%. I'm with you. But at the same time, those crazy stocks can drop 50, 60%. Apple can't do that. This is the first time in like 4 months Apple has done this drop. And prior to that, it's probably been a year. Now, bearish scenario. Apple can turn bad. Remember, with every bullish scenario, there is a bearish scenario. Nothing is 100%. Nothing is always going to go green. Nothing is always going to go red. Always have an exit strategy, no matter how big the company is. Never get lost in the sauce so much to where you're blind and you can't see what you're doing anymore. Who's that? Shelly! She's back. Volleyball. Anyway, bearish scenario for Apple. 327 if it breaks those support lines. If 327 happens, I'm pushing all the chips in. So that's it for Apple. I personally think it's a good try to get in now and ride it to 400. If it breaks those supports, get out. Now let's see if Netflix has a better deal. Better bargain. Now I don't know about you guys, but I've been doing a lot of Netflixing because there's not much else to do. I'll swim. I'll go for a run. I'll play tennis. And on Netflix. But recently on Netflix, there's not much on there. These shows I never heard of. Old movies. What are they doing? There's a problem that might be arising. During the Rona, the peak of it, no movies are really probably being made. Are they? I don't know. I don't think they are. So there's going to be a drought in movies, shows, TV, whatever, in the next coming months. That could affect Netflix later on. But also, it might create some good apocalypse movies. Maybe they could film those because there's no one on the streets. It's a good idea, actually. Scratch all that. So Netflix, they got annihilated last time earnings came out. I want to take a look at the subscriber growth because that's what's important to me. So if you look at this chart, it's beautiful. It looks like staircase to heaven. I've never seen stairs so beautifully aligned. It's like they're purposely trying to line up these steps like to the T. Netflix added 10 million subscribers in the second quarter, boosting revenue by 25% and earnings per share by 163%. However, its EPS fell short of Wall Street forecasts, and its guidance of 2.5 million subscribers additions in the third quarter was less than half of what analysts had expected. So these analysts can really influence the stock movement. If their expectation is too high, it's going to fall. If it's too low, it's going to go up. Even though they have good earnings, analyst numbers really do affect it. So keep that in mind. What I was talking about with Apple, their estimates are low. What do you think that means? Looking at Netflix, we got strong support coming down, solid support. If it breaks this line, we could fall deeper. But bullish scenario, I'd buy here, 480, anywhere around there. Try and ride it up into the 550 range. 16% profit if it happens. If it breaks that trend line support, 450 is coming. I'd take another jab at it there. If it breaks 450, I get out. Bird's eye view, if you look here on the left, that's a head and shoulders. If you would have bought on that far right shoulder, you would have plummeted all the way down. Now, is that happening again? If you look to the right, the other shoulder and arm hasn't been formed yet. So it could do this. Or it could fake out, which I think will happen personally, unless the markets turn bad and something happens. But if nothing turns bad and we continue the levels we're currently at, slightly up even more, it could do a fake out. Bang. Head up for 600. All right, that's it, guys. Those are the two stocks, Apple and Netflix, both great buys as long as they hold those supports and the markets continue. Don't forget, hit the subscribe-y. Thanks for watching, and don't forget, you're a little bit closer to retiring young.